Okay. Hey everyone. Good evening. I hope you guys are having a great evening or afternoon or morning, wherever you're watching me from. Welcome to the OctaFX live trading session. My name is Ambrose Ebuka, and before I go into further details of this session, you can go ahead and let me know your name and where you're watching me from in the comments. So let me know your name and where you're watching me from in the comments. With the OctaFX or in the OctaFX live trading session, what we basically do is we analyze pairs and also take trades in these sessions as well. And you can also go ahead to ask me questions or, type your currency pairs or instruments, it could be commodities or indices as well, whichever one. You can just go ahead and let me know what you want me to analyze in the comments. So constantly look at the comments to see if you guys have questions or if you have pairs that you want me to analyze. Okay, so let's quickly talk about the promo code and what you can get by using this promo code. So the promo code is Ambrose E100, and this promo code is going to give you 100% bonus to your deposit. So you can double your deposit using the promo code Ambrose E100. To apply the promo code, you can scan the QR code or you follow the link in the video description, or you can manually just, type in the promo code Ambrose E100 when you want to make a deposit. So you're going to see like a section for promo codes, and then you can just put in Ambrose E100 and you get 100% bonus to your deposit. Promo code is valid until 31st May 2023. Okay, so as usual, we're going to kick off with major economic events happening today or that has happened today. But before I even do that, let's see who we have in the comments. Let's refresh this. Okay. Rio says, good evening, sir, from Benue State, North Central Nigeria. Welcome, Rio. Durant says, I'm from South Africa. Welcome. Shalbert Cleopatra says she's from Nigeria. Muyiwa from Nasarawa, Nigeria. Welcome, guys. And if it's the first time taking part in an OctaFX live trading session, you can also let me know as well. But massive welcome to every one of you for joining. You can share the live so you can also learn with your friends as well. But yeah, let's look at some of the major economic events that we have today. I'm just going to filter this to just high impact events. And if you want to pay attention or just stay updated with the events, you can leave it at low, medium, and high. But I just like to focus on high events and sometimes medium impact events because they have high impact, just as the name goes, in the market. So yeah, the first one is the Reserve Bank of Australia meeting minutes, and we saw last week that at the live trading session last week where they signaled more rate hikes would be needed in the months ahead, and the meeting minutes have been released, and the board has agreed that additional rate hikes will be seeing more rate hikes in the coming months. So that's something that we're going to keep in mind. And whenever the central banks are hawkish, then they tend to increase these rates, and it also has a positive impact on the currency, right? The domestic currency. In this case, that will be the Australian dollar. Okay, we also had S&P Global Manufacturing PMI, Purchasing Managers Index, and basically what the manufacturing PMI does is it captures business conditions in the manufacturing sector. So if you know about GDP, gross domestic product, would know that the manufacturing sector dominates a large part of the total GDP of a country, right? And it's a very important indicator for business conditions in the overall economic condition of a country. And in this case, that would be Germany. So if you're looking at results or reports that are above 50, just like we have here, or reports that are, reports above 50 are bullish, reports below 50 are bearish for the domestic currency. And we've seen one below 50, we've seen one above 50. And when things like this happen, what you can do is to apply technical factors to identify possible future trends of the markets. We've also had services PMI on GBP, the CIPS services PMI. And if you don't know what CIPS is, it's basically the Chartered Institute of Purchasing and Supply. And this can be an indicator of the economic situation in the UK services sector. So I'm just looking at the comments, 1 sec. So do you have a full webinar? I mean, when we can. So OctaFX hosts this contest and promos that you can take part in and contest and win amazing prizes. So you can check the OctaFX website at octafx.com and, you know, take part in this contest. Just like you can see here, trade and win, you know, and participate, and you can stand a chance to win amazing prizes. Okay, so we're talking about the PMI. That can be an indicator of the economic situation in the UK services sector. And this service sector does not influence the GDP, right, as much as the manufacturing purchasing managers index does. So you want to pay attention to the reports of these economic events. You know, a reading or a report above 50 would signify expansion, which would be positive, and a reading under 50 would also signify contraction, which would be bearish or negative for the GBP. We've also had events or reports on the retail sales and the Bank of Canada Consumer Price Index. And the retail sales just shows the performance of the retail sector in the short term. It can be a key indicator for consumer confidence. And we've also had a significant higher reading on the CPI, on the Bank of Canada CPI, compared to the 0.2 reports or reading on the forecast. So we're going to use technical factors to identify the trend of the Canadian market, as well as its import and as well as its impact on gold. So let's look at, okay, we have one more, and this is the speech. And one important thing about this speech is from the central bank governors or board of directors is that they obviously relate to monetary policy, and, you know, they make comments that could positively or negatively impact the domestic currency. In this case, it's going to be euro. So what you do as traders is that you look out for these comments and identify if these governors are hawkish or they're dovish, and you just capitalize on it. Remember, it doesn't really matter where the market goes. If it's bullish, if it's bearish, as a trader, you can always capitalize on the movement and make a profit. Okay, so we're just going to go straight into the charts right now. I could just delete all this. Just going to kickstart with the dollar index. Remember, guys, if you have, you know, in the course of this session, if you have questions or you have pairs that you want me to analyze, you can go ahead and type them in the comments. Let's take this off. Go ahead and type them in the comments. So we looked at the possibilities, or we considered the possibilities of the dollar index getting to the 104 level and breaking above it last week or during the trading session that we had. And it did that, right? It got to 104, it broke above it, you know, way up to 104.5, and then it has returned back to consolidate around 104, right? And this is also the reason why you should pay attention to the dollar index, because it also influences major currency pairs that are paired with USD, and most major currency pairs, if not all, are paired with the US dollar, right? And these currencies are major because, you know, they are highly traded, they are highly liquid, and they bring about, you know, a lot of volatility to the Forex market. But yeah, the dollar index chart, you know, is dancing and consolidating around the 104 zone. And what you want to do to have, like, you know, a directional bias across other pairs that you trade or other currencies that you trade that are paired with USD is that you want to pay attention to how it reacts to this level. Because if we push up to break above this previous high that was created, then that's going to show a huge or a significant bullish momentum for the dollar markets, right? And then you can use that as an idea, or you can use that to trade the major pairs, or the pairs that are, you know, associated with USD, right? But for that to happen, you know, we have to break this previous high. You can probably see like a consolidation here and then a break above the consolidation, or the market could, you know, get to this previous high and consolidate a bit and then break above. But that can be like an indication that, you know, the dollar is gaining more and more strength. And what do? You buy the dollar, right? So yeah, that's just, you know, my thoughts on the dollar index. And we're going to look at pound dollar, which is, you know, a major pair. Shed some light on Euro USD. Okay, we're going to talk about Euro USD. So before I even start to talk about like the pound dollar, I'm just going to outline some really important things that should be in your framework, you know, as a trader, right? And the reason for this is the reason for having a framework is because you want to have like a guide, you know, some of the things that what's going on. Okay, you want to have like a guide. Yeah. And by guide, I'm talking about things that should help you identify areas on your chart where you can buy or you can sell, right? And your framework should obviously consist of your understanding of market structure, right? And by market structure, I'm talking about being able to identify key levels, being able to identify support, key levels, support and resistance levels. These are key levels as well. And what this basically does is that it gives you like an idea on, you know, areas on your chart where buying pressure or selling pressure could kick in, and you can just look to the left hand side or look to the left side of the chart and just map out these levels, right? You also want to have entry triggers. So the entry triggers are basically like, okay, you understand market structure, you've mapped out this key levels, support and resistance, which is, you know, the mainly used. You can also use your trend lines with trends and trend lines. So your entry triggers are basically like, after understanding what the market is doing or what the market could do, what do you want to see before you execute a trade, right? And that could consist of momentum in candlestick patterns. Let's just say candlestick patterns. Chart patterns could also be some really good entry triggers, right? But most importantly is candlestick patterns, because I mean, this is like a graphical representation of what's going on in the market. It includes the open, high, low, and close of price at a significant time, right? So candlestick patterns very important. You also want to use, if you use indicators, you can use the moving average, you can use the fib as well. And after entering a trade, you obviously want to have your exit levels mapped out as well. So let's say exits, and your exits can be swings. You can use SL and TPs. Right? And lastly, you want to apply risk management on your trades. Okay. So I'm just going to keep this on one side so you guys can really just keep that in mind whenever you're, you know, analyzing pairs or making or making analysis on your trades as well. This side. Okay, so what's going on in the pound dollar market right now? We've seen actually last week we expected the pound dollar market to get way down to at least 1.19 level, which I mapped out. This served as a significant support level for the pound dollar on the 4-hour time frame. But the market was 10 pips away from getting there and started to reverse, right? And even at the reversal, it got to this key level that has served as a consolidation point at some time, served as support as well, support as here as well. And the market consolidated at this point and broke above it, right? Overall direction of pound dollar market is bearish, right? So I'm just going to see this as a pullback, right, for the pound dollar market to continue to the downside. You can also identify if I go ahead to use the Fibonacci tool, you can see that the market made a or reacted to the 61.88 extension level, and what has happened, it has started to pull back. We want to see a continuation of this bearish momentum, and then we can take sell trades, or we can you know, just wait for the market to kind of consolidate at this point. And let me just identify that for you guys. So we can just wait for the market to consolidate at this point, and we can obviously now trade the break of that consolidation to the downside, or better still, trade the break to the downside from this level, because this has also served as a significant level that the market could retest in the future. Let me take this off so you guys can see clearly, right? So pound dollar market could dance around and get all the way up to these zones, and then we can now look for selling opportunities. But if you want to go long on pound dollar, I think that what you want to look out for is a break above this significant zone. I think 1 point, let me write that down. 2250. Yeah, so you want to see sustained bullish momentum above 1.2250, and then you can use that as your indication to go long on, you know, the pound dollar market. Otherwise, you know, it still looks bearish to me, and we'll keep on looking for you know, sell opportunities on the pound dollar market. The market could also, let's just go to the 4-hour time frame again. Take this off. Okay, so we could also start from this point to see bearish momentum to the downside. I still expect the pound dollar market to get down to this point. You know, it could take some days, it could take up to a week, but this is where I expect the market to get down to, right? And we're already seeing the rejections in these candlesticks. So we could, from this point, start to see something like this, and then the break to the downside, right? So this can be a good area to hop on the sell trade on the pound dollar, or you can basically just wait for the market to scale all the way to this point, and then you execute your sell trades. So the reason why this is a very important level for me is because if you look at the Fib tool as well, you're going to see that this kind of like sits on the 61.8 extension as well, right? And the market is already reacting to it, and it's back down to the 50, it's trading below the 50, and then, you know, can be followed by some bearish momentum candlesticks, right? So these are two really important movements on pound dollar that you want to keep an eye out for. Okay. So please shed some light on Euro USD. Okay, let's look at Euro USD. But if you've got questions on the pound dollar markets, you can also let me know in the comments, right? So that we can just, you know, brush on that a bit and move forward. Okay. Let's see. Let's go to the daily time frame. Okay, so the Euro USD market has been like trading between or bouncing off at support and resistance of these trend lines, moving in kind of like a channel pattern right here, but it has failed to continue in that pattern, and it created this resistance. I'm going to also indicate that as well. Let's see. Okay, so it has gone ahead to create this resistance, which has served as a key level that has stopped price from, you know, trading in this trading within this support and resistance trend line. And now the market has pulled back to even trade below this area of value that has served as a resistance in the past, right? Although it was broken above, but you know, it's clear that it's a significant level in the euro dollar market, right? So here's the thing. I'm going to go to the 4-hour time frame. So you can see that even as it's trading below the support trend line, it's also forming like it's also trading in or bouncing off support and resistance trend line as well. You know, it's basically looking to trade in this channel pattern. I'm just going to take out all this order so that you guys can see it clearly. Do I take out this one? Yeah. Right. So we've seen how the market has reacted to the speech, the ECB speech that was just released, and you're seeing this huge rejection. Zoom in a little bit again. So you're seeing this huge rejection from the upside to the downside, right? The thing is, the market is headed down to 1.06, 1.05 levels. But if you go to the higher time frames, we've not clearly broken out of the uptrend, right? So if you look here, you'd see that the market is rallying its way to the upside, and this consolidation, there could still be a break to the upside of this consolidation, right? So whatever it's doing right now, I mean, the daily candlestick is bearish, but I still believe that it's like a short-term bearish move, and it's headed down to 1.06 levels. So if you have, you know, buy trades on Euro USD, you can always adjust your stop loss. If you've been holding this buys, you can always adjust your stop loss into profit, because I believe that it's still going to head down a little bit more, and probably to the 1.06 levels before it continues to go to the upside, right? Or we could also start to see some rejections here, because if you look to your left, you'll see that the market has reacted to these levels. So we could also start to see some reactions at this point as well, and then you see the market come to create like a higher low. Let's just then you see the market come down to create a higher low, and then another higher high, and continue to go to the upside. So that's basically what I mean by we've not fully broken out of the uptrend yet for me to say that the euro dollar market is headed, you know, downwards, right? We're not seeing much of a clear pattern right now. And let's go to the lower time frame. And as it's bouncing off a support and resistance, there's obviously going to be a breakout of either the support trend line or the resistance trend line, right? That's basically what happens when markets consolidate, right? So if you basically see a market that bounces off at, so it could be a triangle pattern, it could be a rectangle pattern, whatever pattern it is, but when it consolidates like this, there's usually a break to the upside or a break to the downside, right? So whatever is happening right now on the Euro USD is just a consolidation that would still break out either to the downside or break out to the upside, right? And this is what you want to pay attention to if you are looking to trade Euro USD, right? You're looking to just take all these drawings off. You're looking to pay attention to how the market reacts at this key level, or how the market reacts at the resistance trend line, right? So if you get to see some if you get to see some bullish momentum, you know, some candlesticks or some consolidation just at the trend line, then you know the market could either break down or move back upwards, right? But what you're looking to trade is the breakout of that consolidation at the trend line. So Karen is asking, how deep would it go down? It all depends, right? The market reacts to zones and key levels. So if you, let me give you an example, right? Let's say, so if you look here, you see that the market created a previous, let me just drag this. Let's just drag this, right? So you see that the market has reacted to this zone, it broke above it, came to create another resistance here, made a test at that resistance, broke above it, and you know, just like that. So it all depends on what happens to these key levels, right? If the market gets down here and breaks below it, then you obviously know that, you know, it's headed for even lower down to this point, right? Let me just indicate that also. So let's say the market gets down here and, you know, consolidates and breaks below, then, I mean, we're looking at the next direction of the market to be here, right? So it all depends on how deep it would go, depends on how it's, nope, that was not a good one. So how deep it goes depends on how it reacts to these levels, the key levels. Okay, so that's on Euro USD. If you have questions on Euro USD, you can also ask me the questions in the comments. I'm looking at the comments to answer your questions as well. The next pair we'll be looking at is Australian dollar USD, which is the Aussie dollar. And the Aussie dollar just, well, most of the major pairs moved funny the last hour because of the economic event. But we're going to look at it just now. Let me look at the comments. Let's see. On this particular pair, if you go to short, where would be your targets? If you're to go short, okay. So it depends on where you want to go short, right? Going short at the middle of a consolidation is not really ideal because we're not seeing any confirmation. We're just seeing a rejection, right? The candlestick hasn't closed yet, so you're not really sure if there's going to be a follow-up to the downside. But if you see a follow-up to the downside, you know, bearish momentum candlesticks, your first target would be this support trend line, and that would be about that would be about 50 pips. That would be about 50 pips. But the reason why, you know, I said it's not good to, it's not really ideal to execute trades at the middle of a consolidation is that you could find it difficult to set your stop loss, right? So let's say you want to go short at the middle. Your stop loss is going to be here. Your take profit is going to be here. You know, it's not really up to a one-to-one risk to reward, right? But you'd be more comfortable to execute the trade, let's say a long here, a long position here, if the market shows you bullish momentum, and then, you know, you have more flexibility for your stop loss and your take profit. So I hope I answered your question. Okay, Aussie dollar. So last week we looked at the possibility of, you know, Aussie dollar getting all the way down to 0.675 levels after the breakout of the zone, but you know that the market would not really just push all the way down except, you know, there's an economic event or The market is going to always react to some previous levels and all that, right? So we have this pullback to the upside, and I'm just going to go ahead and use the fib to see if we are correctly on the 61.8. Okay, not 61.8, but the market reacted at 50 extension level, and it did that twice, right? And the market has currently broken below this significant support. Let me just take this out so that you guys can see clearly. So this key level has served as a significant support for the Aussie dollar market in previous times. You can see the numerous times it has made a retest at this level, right? It has successfully broken above it. I'm just going to zoom in closely so that you guys can see that. So what happened here with this wild movement is due to the events that was released today. I mean, I was on these charts and I was observing what was going on actually. But my overall thoughts on Australian dollar is that the market is still headed downwards, right? It's still headed downwards. But two things you want to look out for. We want this candlestick to close bearish. That's one. We want the next candlestick to show us some bearish signs that we can hop on, or we want to wait for, you know, like a consolidation around this point, because I believe that there would be, and then a breakout to the downside as well, right? And you know, when the market starts to approach this level, you can now start looking to take partial profits, because you know this is a support level. You can clearly see it, and the market is obviously going to react to this level, and it could break down. It could break down below before it gets here. Obviously, it has to break it to get down to this point, right? But just so that you're on the safe side, you can take partial profit. You know, set your stop loss to entry so that you're not taking out and then the market comes down again. Okay. It's got to come. I want to know the targets. I want to know the targets you would place right now, so I calculate my own. Please consider this market of how you react to the market. Okay, so when I started earlier, I mentioned some entry triggers, some things that you want to see before you execute a trade, and that includes candlestick momentum. You know, you want to see, you can use candlestick momentum. You want to see those candlestick breakout from a significant area of the market, and you can use that as your indication to execute, you know, either buy or sell trades as well. So overall, you know, thoughts on AUD USD is, I'm still bearish, but obviously I'd look out for this candlestick to close bearish, and you know, the next candlestick to also show me some bearish momentum and I take the sell trade, or you know, I wait for a consolidation, I look out for a consolidation and trade the breakout of that consolidation to the downside. I could also look out for the markets, you know, to just pull back up into this zone again and then drop again to the downside. But like I said, guys, if it gets to this level, you want to start taking out some of your profit. You want to start taking out some of your profit. Let's look at GJ, the pound yen markets. think I'm also going to identify this level for you guys as well. Okay, so this has served as a clear resistance level for the pound yen market, and the market has successfully broken above it. Remember that we had a key event or a key economic event, the PMI on GBP or the UK service sector released earlier today, and we've clearly seen how the markets react to that event. Remember that the event was higher than forecast, right? And this served as a bullish indication for the pound market, and we've clearly seen how this market has reacted, right? Where's the market headed? It's headed obviously to, let's indicate that as well. 164, 165. The impulsive move has been made already, so this may not be a good time to just hop on the buys, because the market could still pull back a little bit. So that's what we want to look out for, like a consolidation at this point. So we're seeing that the momentum has reduced. There's a rejection on the most recent 4-hour candlestick. We're seeing it pull back a little bit into, and it's trading, within the previous candlestick. So we want to see it close and then look out for a pullback, and we can now trade the breakout of that pullback to the upside. But this is where we are looking to take our targets. I think I'm going to first target, second target. So my thoughts on GJ, I think it's still, you can still identify or look out for bullish opportunities to go long for the meantime. But this is where you're looking to take your targets, because if you go to the higher time frame, or if I just, let me just zoom out a little bit so you guys can see that the market is still trading below this significant resistance trend line, right? Market is still trading below it, so it's obviously going to react at this point, and then you can start to see some pullbacks to the downside. So just to secure some of your profit when the market gets to that level, you can now start to put your stop loss in profit, take partial profits, or exit the trade at once. So that's my overall thoughts on GBP JPY. Let's look at gold. Okay, so in the last trading session that we had, we considered the possibilities of gold getting all the way down to this level, which it did. And remember I told you guys that this key levels, or these are the reasons why you should always map out your levels, because they just give you like a clear indication of where the market could possibly hits, where you can take your targets and the things that you should look out for while you do your analysis and while you execute a trade, right? And now we've seen how the market has started to, react to the zone and push back to the upside, and it has finally come to rest on 1830, right? Or the 1830 to 1835 levels. Let me just zoom in even further, stick this off. So that was just a movement that we took advantage of, the push to the upside as the market reacted to this significant zone like it did here and here and here as well. Okay. I sold my Euro USD and made about $18 a week. I'm an alternate trader. Some days I don't take a trade, but I think Mondays are the days to take a trade for us beginners. So as long as the market is open, you can always find opportunities to trade, right? But there's some times in the market where the market will be less liquid, compared to other times when, like, let's say 2 trading sessions are open and you can take advantage of these sessions because there'll be volatility during that period, right? But ideally, I think it's important to figure out as a trader, especially a beginner trader, just coming into the market. I think it's important to figure out the trading sessions and trading days that work for you. Because I remember when I started trading, I had to use Mondays to identify what was going on in the markets. Markets just opened, so I used Mondays to look at how the market is reacting to the previous week and what the market wants to do during the week. But along the line, I still got to identify some opportunities on Mondays as well in, relative markets, other markets as well. So it's important that as you start trading, you figure out what trading sessions work for you, what trading days work for you as well. I'm still in the sell trade. Is it okay for now? On Euro USD, I guess. So like I said, if you're in a sell trade on Euro USD, you can start now to adjust your stop loss, just put your stop loss in break even or just a bit into profit. Let's go to the lower time frames to see. Yeah, just a bit into profit, so that, because the market is currently at the middle of this consolidation or this bearish channel, right? So it could continue to move downwards, but I want to see some bearish momentum, or you could just get back to this resistance trend line and push back downwards, right? And since you're in a sell trade, you don't want to be caught in that movement and then, not make profit from the trade. So you can put your stop loss a bit into profit, or you can close some partial positions, or you can also put your stop loss in break even so that you would be running a risk-free trade. So I was just about to talk about the gold market, and remember, the gold market is currently sitting at a significant level as well. You've seen how it has reacted to these levels, and I've always had this level here, and now I'm actually very observant about what gold does. But what I want to look out for is for gold to, like, rally a bit to this. Yeah, just rally a bit to 1845, 150 levels and then drop down to the downside again, or for gold to, consolidate around this 1830 and 1835 levels and then just break to the downside, right? But I'm still bearish on gold for the rest of the week, except gold successfully breaks above 1850, and then, I start to look at the possibilities of gold moving to the top side, and then we can have this called an inverse head and shoulder pattern, gold moves to the upside. Right, so that's my thoughts on gold as well. Still bearish on gold for now. Till it breaks above 1850 levels and sustains that break, then I can start looking for buying opportunities. So if you're looking for targets on gold, after, let's say, this consolidation at this point and a breakout of it to the downside, then you're looking to take your targets at 1820 to 1825 levels, somewhere around here. That's where you're looking to take your targets on a gold sale. But you obviously want to look out for the breakouts, the breakout of the consolidation, and then that can be your indication. But remember, guys, just so that you're not good. Yeah. Okay. Right. So you want to wait. We want to wait for this consolidation and the breakout, and then that can be your indication to sell. But if gold gets to 1850 and breaks above, then this would be an inverse head and shoulder pattern, and the breakout, the retest, or the consolidation, or the pullback, and then you want to trade to the upside. So if you have questions on this analysis that we have done right now, you can let me know in the comments. I'm going to be answering your questions right now. Okay. Some says only to go for one pair. Is it necessary? Like I said earlier, it depends on you as a trader. It's I think the reason why it's important you start with one is so that it makes the learning process less difficult, right? And less complex. There are a lot of trading instruments in the market. Like if you're trading with OctaFX, you have a lot of options where you can trade currencies, metals, stocks, digital currencies, right? But the importance of starting with one is so that you don't get overwhelmed with a lot of information, right? The way you trade some currency pairs would not be the way you're going to trade silver and gold or Bitcoin as well, right? So you can start with one, and you can start with some major pairs which are highly volatile, and then you can now start understanding other pairs and other instruments and diversifying your knowledge and trading abilities, right? So I think the saying of starting with one pair is for beginner traders looking to embark on their journey, right? But if you're trading gold, then you can also trade USD card, because these are correlating instruments. All right, guys, you can go ahead and let me just type your questions in the comments, or let me know what pairs you guys would want me to analyze, and I'll just take like one or two questions or one or two pairs, and that'll be it. It seems gold will be bearish. Yes, that's my overall thoughts on gold. Remember that we are still trading below the 200 period moving average on the 1 hour time frame, and you know, it's bearish. My overall thoughts on gold is bearish. But like I said, if you get a break above this 1850, which could also go in line with the 200 period moving average, if you get a break above these levels, then a break above 1850 would be a break above the moving average, and that can be an indication that the market or the bearish move is or has come to an end, right? If you look at the higher time frames, you would see that there are still possibilities for gold to continue to the upside, right? So break above 1850 levels can be my indication to go long. So if we're looking at the NASDAQ markets, I'm just going to briefly talk about the NASDAQ markets before we wrap up, right? So we have a break below this significant level. If you look to the left, you're going to see that you're going to see why this is a significant level for NASDAQ. I think I'm just going to go to the higher time frames because we would have more retests at that level, I believe. Yes, we do, right? So this has served as a significant level that has been broken below. So we want to see this candlestick close bearish below this significant level and a sustained bearish momentum to trade NASDAQ all the way to the downside, right? But obviously before it gets to the downside, you want to respect some swing lows. Let's zoom out a bit again. So you want to respect some swing lows. You want to respect this zone. You want to respect this one as well. And these are areas the markets could react to while it heads to the downside, right? We're trading out of this channel right now, and you can see that the market has also formed a double top, right? So we have the first top, we have the second top, right? And if you know about chart patterns, double top, these are reversal patterns, right? The market has currently broken below the neckline. We want to see that sustained momentum or a breakout of a consolidation and then trade all the way to the downside. Okay, so about the correlations, I said if you trade gold, then you could also trade USD CAD because the Canadian dollar and gold are correlated. That's what I meant. So Euro USD and USD JPY, these are major pairs. Guess the market is the good. But the thing you want to remind yourself as you analyze is that you react to the market, right? That's why you're a retail trader. You react. The market acts and then you react. So you can expect. Okay, just gonna take one last question. John is asking, is gold going to be bullish? I think in the long term, yes, but for now, you know, it's still bearish, right? It's still bearish. If you get a break above 1849, 1850, then we can start looking for bullish momentum or buy opportunities, right? But it's still bearish, right? We're still trading below the 200 period moving average. So once we break that, if gold breaks that rather, then we can look for bullish opportunities. This zone, 1785, 1790, these are zones where you can also look for buy opportunities. 1820 as well is also a zone where you can look for buy opportunities, because we've not broken out of the bullish structure on the higher time frames, the daily time frames. So in the long term, yeah, but for now we're still bearish. All right, guys, I'm just going to quickly show you guys again about the promo code that you can use to get 100% bonus on your deposit, right? The promo code is Ambrose E100, and you can use this when you want to make a deposit to double your deposit times 2, right? The promo code is valid until 31st May 2023. So you can apply this promo code by scanning the QR code or follow the link in the description, or you can manually type in this promo code when you want to make a deposit. So if you still have questions, you can ask your questions in the comments. I would answer your questions in the next live trading session. Thank you all for joining, and I'll see you guys next time.